Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be doing our daily transparency update. So that's, as always, us breaking down the portfolio, talking about our gains and losses for today, and especially focusing on Tesla stock as well. Since we've seen so much movement come out of this one recently, you already know we got to discuss Tesla a little bit. So just starting off, as you all can see, I got a red day of around minus 0.92% for the normal market hours. That's minus $1,256.83. And then for the after hours, we're just a little bit into the negative at minus 0.17%. That's minus $225.94. And then for the portfolio, we're still at a nice clean 135 at $135,144.60. So really not a bad day. Yes, I know we lost 1,000, a little over 1,000, about 1,500 if you count both the aftermarket and the normal market hours. But as always with these videos, I like to reiterate and emphasize over and over again that I don't look at red days as a bad thing. I look at red days as opportunity. And the good thing about this time around is, for those of you that are familiar with my videos, I talked about how the reason I couldn't buy Tesla stock recently was because I had to save up a bunch of money to pay off taxes in July, and then I also had to save up a bunch of money to pay off this big credit card bill that I had recently. That was going to be a decent amount of money as well. So thankfully I have the taxes covered, I have the credit card covered, and I've been selling a few things that I don't need at home here. So I have some cash on the sidelines. Not anything crazy, you know, it's not like $8,000, $5,000, it's not $10,000, $20,000, but still, I've got a little bit on the sidelines right now, and that's something that I haven't had for what seems like a few months now. A lot of people ask me, why are you buying at $2,000 when you could have bought it $1,500, $1,400? And I always address that as in, hindsight is always 20/20, of course. A few months ago, you wouldn't have been able to accurately predict that Tesla stock would be like where it's at right now at $2,000. So obviously hindsight is 20/20, but my answer to this, as always, is most likely that I just didn't have money at that time period, or that I was needing to put my money somewhere else, such as taxes or a credit card bill. Because as you all know, I put most of the money that I get into the stock market. I don't have an emergency fund in my bank account. I use the stock market as my emergency fund. Trust me, I understand that I'm taking some risk there. I realize that, but I think the benefits outweigh the risk, because I'd rather have a nice return on that $30,000 compared to like a 1%, 1.5% return on your savings interest rate. And I almost forgot, before we get into this farther, as always, please make sure to smash that like button if you all do enjoy these transparency videos, me keeping it real with you all, regardless of whether my portfolio is green or red for the day. I don't mind sharing it either way, so just make sure to smash that like button and, you know, maybe help me out with a good deed for today. But like I said, that's my reasoning why I haven't bought Tesla recently, up until just a few days ago, like on Friday, where I dropped 10K into Tesla. And yes, the 10K was from me selling some Microsoft, but I also put like $3,600 into Tesla just a day or two before that day of me putting 10K in. So that's my answer. Usually when I'm putting money into Tesla, that means I have money. And if I'm not buying stocks, it's either because I see a really big opportunity by waiting, or that my money is simply just needing to go elsewhere, like on a credit card bill or some sort of payment or taxes. So that's usually the justification for me. Most of the times with Tesla or many of the other stocks in the stock market, it's going to be dollar cost average. I'm a big fan of dollar cost averaging, which is basically just buying it at what it's at for the share price at that point in time and not stressing about it any further. Pretty much trying to time the market and trying to time all of these dips end up on investors missing out a lot of opportunity, where if they would have just bought at that point in time, held through the dip, and even if there wasn't a dip, just hold through anyways as normal, then you don't miss out on a lot of these opportunities like people do, like with the most recent crash. People had plenty of opportunity to get in on the stock market when it was at these really far down low points. And instead, some people, of course, were uncertain. Others were greedy and wanted to wait till it dropped down even more. I actually knew a lot of friends that said, I'm waiting until it drops down farther before I get in. And for those people that were trying to buy on the perfect bottom of the stock market, they missed out on a lot of opportunities. And so, as you all know with my videos, I was buying a lot of Microsoft stock, especially on this way down right here. And so I profited off of Microsoft, of course, with this recovery, and I cashed in those profits and then now put it into Tesla stock. So I'm one of these people that dollar cost average, and then I really start putting as much money as I can when there's a significant dip in the stock market, like we saw most recently. And that's really the most aggressive way you can approach investing. If you want to counter a bad situation like a stock market crash, the best way you can counter that is by buying it when it is dipping, because you know that in the long term, if it does recover, then you're going to make a lot of money from that dip by taking advantage of a situation where everyone else is panic selling and uncertain. So that's kind of like an offensive approach to investing that I really like to take on. And then, as I said, I like to dollar cost average. And then in some situations, I'll wait around with some cash just to buy in at a point that I feel like is worth it. So addressing the beginning of the portfolio today, I actually wasn't awake. I woke up at like 2 p.m., so I didn't really get to experience this live time. But just viewing this starting at 9 a.m., it actually began to seem like another one of those crazy Tesla days. Even Apple and Microsoft were kind of up similar as well. But just looking at this part alone in the chart, it looks like it would be another one of those Tesla days. So I'm assuming, at least for the pre-market hours, a lot of people started buying in thinking, okay, this is going to be another day where Tesla goes crazy. And then unfortunately, once it hit 9:30 a.m., there was a huge drop downwards from plus 3.25%, which would have been plus $4,437, dropping down all the way to 9:55 a.m., which is pretty much the inverse of that, which is minus 3.18% or minus $4,350. And then since that point in time, we had some volatility here and there. Reached this peak in the midday at 12:20. That's at plus 0.74%. And then we had a little bit of a decline here with some more volatility up until the end of the day at 3:55 p.m. That's at minus 1.05% or minus $1,433.67. And then we entered the after hours after that at 4 p.m. in which we had, a slight bit of up and down, but pretty much just a plateau here, kind of what you would expect in after hours. So as I said, we lost about $1,500 today if you count both after hours and normal market hours, and it actually started out looking like it would be another huge day for Tesla, which unfortunately it didn't end that way. But addressing the topic of whether I think there could be a pullback on Tesla stocks sometime soon, keep in mind anything that I say is not to be considered financial advice. These are just things that I'm thinking right now. Obviously, it's not a set in stone prediction or anything like that, but just addressing the stock price, honestly, there is one thing that I will address with Tesla stock, and I would be as bold to say, at least from now until the event of Battery Investor Day, which is September 22nd, I believe that the share price will be higher than what it is at currently by that time period. So even if there is a pullback in the meantime, if it does happen, then I still think the general trend is that Tesla is going to be higher than this $2,009 by the time of September 22nd, or maybe just a little bit after it. Now keep in mind, with this topic of there being a pullback, there could be a pullback. We could have a few red days, but I don't think it's going to last very long in terms of the general trend. I think even if there is a pullback to like $1,900, $1,800, that it's going to easily recover back to where it was at this $2,000 price tag. And that's just because we have so many events happening in these upcoming few days. Like I said, the stock split is happening in just a few days. We have Battery Investor Day on September 22nd. We have potential S&P 500 inclusion, which is supposed to be huge as well because many firms are going to have to buy in on Tesla regardless of that share price at that point in time. So keep in mind, even with people thinking about there being a pullback right now, I think the general trend, especially over this next month or two, is upwards from where the current share price is. So basically, the pullback is going to be irrelevant in my opinion unless you're looking for an opportunity to buy. So that goes along with what I was talking about earlier, which is taking opportunities on these red days. So when I see a day like today, obviously I think, oh well, it's not another green day going along with the streak that we've seen recently. But what I really like about a day like today is the fact that I see an opportunity for people that would like to get in on the stock. It's cheaper than it was Friday. So in terms of a discussion on a potential pullback, I think that's more relevant when we're talking about a short-term window or a short-term opportunity for people to get in on this stock if it does pull back potentially, compared to the topic of a pullback being relevant in terms of Tesla going down back where it was at, which I don't think it's going to do. So in discussion of a pullback, I think that topic is mostly just relevant to the people that are looking for a short-term window or a short-term opportunity to get in on Tesla. Now, keep in mind, it's not guaranteed that we see one, but if there is one, I think the most relevant thing is that that's a short window that people can get in on Tesla as it is at a little bit of a discount. Because as I said earlier, there's a lot of events happening over this next month or two. Keep in mind, nothing is guaranteed to increase the share price, but at least in my opinion, I think we will be seeing a share price higher than $2,000 by that September 22nd date. And that's just because we have so many events going on. We have the stock split. And I think a lot of this factored into the stock split. Keep in mind, after this stock split happens, I feel like people are going to be thinking less about, okay, is this share price currently worth it? Because it's not going to be visually at $2,000 anymore. It'll be at like $400 or somewhere near there. So at $400, regardless of what you knew the share price was at before the split, when you look at it $400, it's just human nature to think, okay, that's not that bad compared to what we've seen it at recently. So I think even after the stock split, it's going to be seeming more attractive, especially to these investors that have always wanted to get in on Tesla, didn't have access to fractional shares, and finally have a chance to. So in my opinion, even if there is going to be a pullback over this next month or so, I don't think it's going to last very long because there's so many events going on. Like I said, there's the stock split happening. I see some potential in that driving the price up just a little bit with retail investors getting in on that finally. Now keep in mind that's not guaranteed to happen, but like I said, if there is a pullback, I think what people need to focus on as investors are the opportunity to buy during that pullback before it potentially goes over that price once again in the future, which I think in the long term, I'm in that boat with ARK Invest thinking that the share price could easily be worth $7,000 just over the next 5 years. I think that's easily possible with Tesla. I think $10,000 per share price, if there's never a split, is a very big possibility. Now keep in mind those price targets are in the case of us never seeing a stock split for Tesla, but I think those are pretty realistic price targets. And so especially over these next couple of months with a lot of events going on, I think we could just see more growth coming out of Tesla stock. And even if we don't see a crazy amount of growth in addition to what we've seen already over these next couple of months, just keep in mind that gives you and I more time as investors. If we want to get in on Tesla stock a bit more, then that gives us more time to gather up some money and put it into that, which I am completely fine with. That actually wouldn't bother me too much. That just gives me a little bit more time on this opportunity here, which is getting in on Tesla. And that is something that I'll continue to do as I get more money. I'm going to be putting it into Tesla stock. But just addressing all of this in the idea of a pullback, I'm basically saying that I wouldn't be surprised if we see a pullback, but I don't think it would last very long in terms of the general trend, just because I see the stock going upwards even higher over these next couple of months because of Battery Investor Day, S&P 500 inclusion, and of course the stock split happening as well. So if there is a pullback, I think that would be a good opportunity for people to get in on the stock. And in addition to that, I wouldn't be surprised if this isn't the end of the growth streak for Tesla. Like I said, we had a huge start at the beginning in the pre-market where it was at plus like another 3% or so. So I wouldn't be surprised if we see some other big growth days this week for Tesla. But then again, it wouldn't be too big of a surprise if it's pretty much red the whole week as well, just because there is a lot of confusion around like the stock split, and that mostly involves like the official statement by Tesla where it was talking about you'll be rewarded a dividend of 4 additional shares of Tesla per 1 share owned by August 21st. So for a lot of new investors, there's some confusion for them if they were to buy after that August 21st date. Keep in mind, I think the brokers are going to have to make up for that anyways. Even if you aren't rewarded the additional shares after August 21st, if you buy after August 21st, the brokers are eventually going to have to make up for that. And from the message that I got from Robinhood, it seems like they have everything handled in terms of like multiplying the fractional shares and things like that after the split occurs. So I think there is a little bit of confusion around like that statement from Tesla. Some people are worried if you buy right now, they won't actually reward you for more shares. So up until the split, that could be a factor in maybe some red days. But like I said, I also wouldn't be surprised if we see some other big days out of Tesla just this week alone, considering how close it is to the stock split date. But anyways, just jumping into the numbers for today. First off, we have Tesla stock at minus 2.05%. That's minus $1,941.71. And then for the total return, we are at plus 73.59% or plus $39,374.39. So for the total return, I'm absolutely satisfied. Like I said, this is my favorite stock in the stock market, and I'm definitely happy with it so far. So checking out the next one, we have Microsoft stock at a green day today of plus 0.23% or plus $45.60. And then for the total return, we are at plus 24.57% or plus $4,000.61. And then finally, we have Apple stock. Wow, I don't even think I had looked at the share price today. I knew it was in the green and at all-time high most likely, but I didn't even check out the share price. It's at $505 almost. I think this is an all-time high. We can look at it on the weekly. Yeah, it's an all-time high. It did hit higher than that at the beginning of this morning, I'm assuming. But still, all-time high for Apple. almost $505 per share. That's amazing. So we are at plus 1.47% or plus $306.60 for Apple. That is plus 76.52% or plus $9,191.52. So a fantastic day for Apple as well. And I do like the fact that Apple is more similar to Microsoft in terms of the portfolio diversity, like the position. So around 15%. I like that a lot. It's nice to have these two more similar in terms of percentage. So Apple has a little bit more sway in comparison to Microsoft now. They're kind of equivalent. So anyways, I hope you all enjoyed this video. Please make sure to smash that like button if you did. I just thought I would share my portfolio once again with a transparency update. So as always, if you would like to begin investing, feel free to check out Robinhood and Webull in the description below. And especially with Webull right now, if you deposit $100 and use my link, you'll get 2 free stocks valued up to $1,400. And keep in mind, you can withdraw that $100 after you get the free stock. So it's just nice passive income regardless. Just thought I'd let you all know. But I hope you all enjoyed this video, and I hope you have a fantastic rest of your week.